Welcome, dear traders. The markets were at the crossroads. As shown by the movement of the stocks and the currencies in the Asia-Pacific trading, stock index gains were limited early Wednesday despite Wall Street closing with the green figures yesterday, and this was mainly due to the deteriorating economic outlook in China. However, key U.S. economic indicators and the Fed's future monetary policy remain the main factors influencing Asian equities and currencies. Mixed U.S. statistics have already made markets speculative about the possible pause of a rate hike. After the comments of several Fed speakers, the uncertainty has increased even more. On a Tuesday, well-known hawk Christopher Waller said that slowing inflation could lead to a rate cut in 2024. Michelle Bowman, on the other hand, believes that further rate hikes will be necessary to curb stubborn inflation. As a result, markets are staying away from a risk as they await the release of key U.S. price data on Wednesday and Thursday. In general, most investors and analysts are leaning towards a softer stance from the Fed in the coming months. On Wednesday, the US dollar index began to decline toward 102.50. Its price against the six major counterparts consolidated at the lowest levels for the last 3 months. The greenback's narrow intraday range remained under pressure. The currency traded within the 102.40 and 102.70 range. Overall, the US currency fell for the fourth consecutive session. If we see weak reports on GDP and prices in the United States, the index may plummet toward the support of 102.30. The next resistance is near the critical level of 103. At the same time, the US dollar weakened across the board against the euro and the Australian dollar. It even broke through key levels. The US dollar was also pushed down by the decline in the US government bond yields. For example, this indicator of 10-year Treasuries began November at the high levels, above 4.9%, and today it fell below 4.3% and became an additional negative factor for the US dollar. On the other hand, Treasuries to some extent performed the work of the Fed to limit monetary policy. High yields were partly responsible for the pause in early November, and this trend has come to an end, strengthening the chances of a Fed rate hike. And the Bank of Japan spokesman's statement was a negative for the yen. In his comments today, SEIJI ADACHI warned that the regulator would continue to remain patient with the current soft policy. In addition, the October decisions on the yield ceiling for Japanese government bonds do not point to any future changes in the monetary policy settings. However, the US Federal Reserve has probably finished raising interest rates. Therefore, the dollar-yen pair is highly unlikely to rally to the highs of the mid-November. Against the US dollar, the Australian dollar managed to break through the key resistance level of 0.66 and rise to 0.6670 during the Asian session on Wednesday. Despite the further decline to 0.6330, the Aussie dollar pair maintains overall bullish momentum, and the main drivers of the Aussie's growth were the differences in the expectations between the central banks of both currencies. While the majority of the market is waiting for softer decisions from the US Federal Reserve, the Reserve Bank of Australia is ready to continue acting aggressively. This was recently stated by central bank's head Michelle Bullock. The governor believes that domestic demand is increasingly contributing to domestic prices and that a significant response from interest rates will be required. As a result, the Australian dollar remains near its highest level in a few months. Trading within the range of 0.6627 and 0.6677, the Aussie dollar pair can soar to the technical resistance of a 0.67. The next support level is located at 0.6570. The New Zealand dollar increased by 1% to 0.62 today, and the price jumped to almost a 4-month high after the Reserve Bank of New Zealand's decision. Today, the regulator kept its interest rates unchanged for the 4th straight meeting. Policymakers believe that another increase may be needed if inflation is high. As a result, the Kiwi strengthened on the sharp fall in the US dollar and the hawkish outlook of the New Zealand Central Bank. The range of 0.6132 and 0.6209 continues to reflect bullish sentiment, but the Kiwi still fell to 0.6160. That's all for now. Stay tuned for more updates with the InstaForex TV. We appreciate your feedback. Please leave your questions and comments below, and see you soon.